Hello, good morning. My name is Blaize Pengilly. I'm from CryptoTaxCalculator. Thank you to everybody that is tuning in and joining myself, Patrick, and Justin McCormick live for this special edition live session hosted by CryptoTaxCalculator, covering the nitty-gritty of NFT taxes. Now, I'm joined by my colleague and crypto degen, Patrick McGimpsey. How are you, Pat?
I'm really well. Thanks, Blaize. Thanks for having me.
Very good to see you. And we are honoured to be joined by a very special guest, Justin McCormick from FoundersCPA. How are you, Justin?
I'm doing well. How are you?
Very well. Now, we have, for those of you watching at home, you're probably noticing there's some funky accents here. So, Pat and I joining in from Australia. And Justin, whereabouts are you based?
Based out of Chicago.
Chicago. And how is it there at the moment?
It's very nice out. It's finally hitting spring, no longer winter, so very happy out here.
Great. Good to hear. Well, I'll just give a rundown of how the session today will run. So, like I said, we'll be covering the nitty gritty of NFT taxes, and Justin will be picking your brain to understand all of the complexities of that. This session is hosted by CryptoTaxCalculator. So, a little bit about CryptoTaxCalculator. We're the only crypto tax software built for Web3. We came into existence when our founders, Tim and Shane Brunette, were unable to solve their own crypto tax nightmare back in 2017. So we're product led and we pride ourselves in developing quickly to keep up with the constantly evolving crypto landscape, so we can serve everybody's crypto tax needs. So whether you're a hodler, miner, leverage trader, or NFT flipper, we have a solution and we're happy to help you out. Now, Justin, you're a senior associate at FoundersCPA. You specialize in crypto tax. You have the amazing Bitcoin shirt as well to match. Could you tell us a bit more about your experience and what you do?
Yes. So, in layman's terms, I essentially help clients with their own crypto taxes. I do the crypto tax preparation. So, I do most of the heavy lifting, from building the inventory, gathering the data, fixing it, and painting the picture that is their activity. And then I work with the client to fill in some of the missing pieces and blanks and get it all sorted out.
So you're a lifesaver, essentially, if we are to dull it down, and you're probably saving a lot of people from many, many crypto tax headaches as well. Is that right?
Believe so, hopefully.
Awesome. All right, well, let's get into the session. I will pass over to Pat, who will be question master for today. And then we'll go through a bunch of questions. And then there's also the chance for anyone watching to ask questions as well. So if you've got any questions, you would like anything clarified, you have your own NFT questions, please do pop them in the chat. We'll be monitoring through them and we will have a chance at the end of the session to get to them. So please fire away with your questions. And Pat, Justin, I'll leave it to you guys.
Great. Thanks, Blaize. So today we're going to start by going through some of the most frequently asked questions about NFT taxes by our users. We're going to start probably reasonably simple and then warm up into some more curly questions and scenarios. Before we dive into the questions, Justin, would you mind giving us just a basic overview of how NFTs are treated by the IRS?
Yes, Pat. So the IRS treats NFTs as property. So essentially, if you're buying them with anything that isn't fiat, or if you're selling them, those are both taxable events. And the sales will incur a capital gain or loss. And then, depending on the category, they aggregate at the end of the year. So unfortunately for, big NFT traders, this does mean you need to have pretty good records of the evaluations of these things upon purchase and sale.
Cool. Awesome. That makes sense. And that leads pretty nicely into our first FAQ. So how do you calculate the cost basis of an NFT purchase?
Essentially, hopefully on the other side of the transaction is either fiat or a different coin. You can use the fair market value of those determine the price of the NFT. A lot of tokens have been around long enough, such as Ethereum or Bitcoin, where you can use websites like CoinGecko or CoinMarketCap, or you can, use a tax software that comes up with their own solution for pricing or spot pricing, as they call it. And you can use this to figure out, what was sent in, and then you can reverse that for the actual value of the NFT.
Cool. Okay, that makes sense. And so then on the other side of the trade, how do you calculate the proceeds from an NFT sale?
So, it's the similar method. Essentially, you look at what comes in for the NFT sale. So, like if I were to sell an NFT for 1 Ethereum, I would figure out the fair market value of that 1 Ether at the time, and then that would become the proceeds minus any gas fees, if applicable.
Cool. Okay, that makes sense. Do you think you could give us like a really simple example of an NFT purchase and sale, and maybe how that would be viewed in terms of taxes?
Sure. So to start, let's assume we're keeping this easy and simple on Ethereum, and we're going to use OpenSea. Say you bought NFT X for 1 Ethereum at the time, which has a fair market value of let's call it $1,000. So the cost basis of NFT X is 1,000. Let's assume for the day, you don't have to pay gas, so we're not going to factor any of that in. So for the purchase, you have a cost basis of 1,000. And let's say you hold it for 6 months and both your NFT goes up and the fair market valuation of ETH increases as well. So you sell it for another ETH, but this time, right, it's at 2,000 is the price for 1 Ethereum. Since it's only 6 months, you have $1,000 gain, which is the 2,000 proceeds minus the 1,000 cost basis. And since it is under 365 days, that'll be a short-term gain as well.
Nice, that makes sense. The round numbers help
Yeah.
put it into perspective. All right, cool. So that's kind of like some of the more basic questions that we get. Moving into something a little bit more curly, how do you calculate NFT to NFT trades?
So unfortunately here there is no IRS guidance. So we've developed two routes for this. The first is generally what clients prefer, and for NFT to NFT trades, you're essentially using the cost basis of the NFTs coming out of your wallet. So let's, say for example, we're going to do one NFT for another. If you purchase the first NFT for $100, you would say the total transaction value on that trade is just 100. The second route is a lot more work and sometimes, quite frankly, impossible. But there are methods using certain APIs to pull like collection stats and try to come up with like a fair market value of the collection at like a very high level for the transaction. Now, the reason why sometimes that's not particularly a great route is that NFTs within a collection can be, very valued as far as pricing goes. You might have one NFT be worth $100 and another worth 10,000. So going down the fair market value route sometimes is a bit painful.
Yeah, that second option definitely sounds like a bit more work.
Mhm.
And because there's two routes there, like is it important to be consistent with which route you take? So like if I have multiple NFT to NFT trades throughout the year, can I use, each method, or should I stay consistent?
Ultimately, you should stay consistent. The IRS would probably prefer taxpayers to go down the second route. Unfortunately, there's a lot of difficulties and even accuracy related issues with that route. So, if you're going to go through the first route, I would just stay consistent. And then that way, if you're ever audited, you only have to defend, one position. And then the IRS can't use the fact that you're, unfortunately, willy nilly picking and choosing which one per transaction against you. So consistency is key, and definitely doesn't really matter too much which route you pick. Just stick with it.
Okay, cool. All right, that makes sense. I'll keep that in mind for my own taxes. Um, so airdrops have been on the news recently with the Arbitrum airdrop, and I know NFT airdrops may be a little less frequent than token airdrops, but there have been quite a few over the past year. How do people handle free NFT airdrops?
Again, this is kind of like the second route. Using a variety of sources, you can try and determine a fair market value. Sometimes, that's very hard, especially if there's not liquidity for these things prior to the airdrop. So generally, then I tell clients to just do something nominal. Call it income at $1 per NFT. That way, you've done the best you can. While you go down that route as well, I'd recommend documenting that there is no easily accessible fair market value out there, and then do something nominal. And then the IRS probably isn't going to have much to argue against you.
Okay, yeah, that makes sense. And like, say there's a situation where, you're a holder of an NFT, and the holders of this NFT get airdropped, or kind of get the opportunity to mint an airdropped NFT. Does it change the tax classification if the person actually has to, make a transaction and mint the NFT rather than just receiving it into their wallet?
Um, This would be very fact dependent, right? So unfortunately, I don't think I can give a great answer as far as like how a broad answer. But essentially, like an airdrop's going to be income, and minting an NFT is more of a purchase. And for mints, if you're taking the position that gas fees are taxable events, which is likely how it's going to play out, but again, no guidance there. You can at least wrap the fair market value of the gas fee into the NFT purchase.
Okay, cool. That makes sense. And kind of leads into our next question as well. What do you do with like worthless NFTs that you either got, airdropped, or that you bought and they've just completely lost their value? Maybe they've been a rug pull or something like that. Is there anything you can do with those?
Yes, essentially, you're going to want to trigger a disposition event to capture the loss. This is only going to be valuable if your cost basis is high. So, if this was, an airdrop NFT where you did like income at a nominal amount, it may not be worth the effort of actually disposing of it. You alternatively may pay more in gas fees than the tax losses as well. So, you're going to want to factor that in. But the easiest way to claim the loss is to sell it on a marketplace such as OpenSea. I've seen clients buy and sell for free, essentially, or $0. And that's the safest route you can take. Alternatively, you can try and argue that sending it to a burn address is a disposition event. There's no guidance in regard to this. The IRS has come out with guidance recently saying that crypto is not a security, so you can't take the worthless security route, which is kind of what that is based upon to a degree. So that is a route, if you want to be aggressive and your risk tolerance is a bit higher, that you can take.
Yeah, okay.
Justin, can I ask, how often are you seeing that with your clients? Like, is this something that you're seeing quite regularly, or is it more of a edge case?
Needing to burn an NFT?
Yes, yeah.
I feel like I've seen it frequently. It really just depends on the clients. Some are, lot more into NFTs than others. So the ones that are heavily involved in the NFT space, I see burn quite frequently, if not just to kind of like keep their own wallet clean. And then there, it just comes down to the taxpayer's risk tolerance. If you're willing to be a little more risky, you can argue that that is a taxable event and a sale for zero. Alternatively, if you want to be safer, that would just be an exit from your holdings.
Great, thank you.
Cool. So I kind of fell quite far down the NFT rabbit hole over the past few years. I guess unfortunately, or maybe fortunately, I don't know. But I personally am a big believer in trying to take advantage of opportunities to earn yield on my assets if possible. So over the past year, I've been quite interested in the sort of NFT DeFi combination projects. So I've actually deposited quite a few of my NFTs into an NFT lending platform called JPEG. I'm not sure if you've heard of that or seen that before, but basically it involves sort of locking my NFT into a smart contract on the platform to act as collateral. And then I minted the platform's native stablecoin or also like an ETH derivative against the NFT. I was just wondering if we could answer a few of my questions about that, because I'm a little bit confused on how that might actually work for taxes.
Certainly.
Cool. So the first thing that I was kind of wondering about is how would my like NFT collateral deposit be classified? Is there anything really to consider there at all?
Absolutely. So the fun thing about loans and liquidations are that they're very fact dependent. Classifications also partially depend on, is the loan open or is it closed? Generally, in a fact pattern like this, the collateral would just be like a non-taxable outflow. and it should still be in your holdings because you still technically own the NFT. So for crypto tax calculators purposes, that would be like a withdrawal or a transfer out. Those would both achieve the necessary effect.
Okay, cool. That makes sense. And then like moving on to the borrow, does it make a difference that like the asset is minted against the NFT collateral, like rather than borrowing in a more peer-to-peer fashion that happens in other NFT lending platforms? Is there anything to consider there?
Yes. What's important to consider there is whether this loan will get liquidated or not. Essentially, if it does get liquidated, this is all more akin to a trade. Again, very heavily fact dependent. So, like everyone's scenario and fact pattern, even if slightly different, may have different results. But generally, it doesn't matter so much that it's being minted because of your collateral. It would still just be like a non-taxable in at fair market value for the cost basis.
Okay, cool. And say the worst was to happen and the value of my NFTs fell and I did get liquidated, how would I sort of handle that situation?
Well, where you're going to want to start is the IRS's website, specifically topic number 431 on canceled debt. And you're going to want to go through their examples and compare your facts and see how they play out. Generally, a loan liquidation, it's then changed to akin to like a trade. So it would be a sale of your NFTs for whatever you received as collateral. But there are more factors that go into it. So again, you're really going to want to spend some time and make sure you handle this appropriately.
Okay, cool. And do you get many clients, or do you see this sort of thing happening very often, or is it still kind of not so common?
I'd say it's pretty rare. But then the clients that do have activity like this tend to have a lot of it. So it's rare as far as quantity of clients. But then generally, when someone's into a lot of lending activity, you'll see a bunch of it.
Yeah, okay, that makes sense. I'd probably be a difficult client then, I guess.
Sounds like it might.
So obviously, like being crypto specialist CPAs, you guys like have a lot of clients buying, selling, and even creating NFTs, I guess.
Yes, we do. Generally, our clients are either NFT traders, right? So a lot of buying and selling, and then we do some taxes and accounting as well for some NFT companies that are in the business of, creating them and selling them.
Yeah, awesome. Okay, so like from your experience, what are like the most common issues that people are going to run into when handling their NFT taxes?
So the first one I see a lot, especially in the NFT world of crypto, is Comingling, right? People put funds together to buy an NFT and then sell it and then distribute those funds. And that's generally like fine, but you're going to want to do a lot of record keeping. You're probably going to even want some documentation of like what the split is. Because, at common law, those are going to be akin to like a partnership or a joint venture. And if it's a partnership, that requires its own separate tax filing as well, which a lot of people don't realize. So commingling is something you can do, but you should really look into before you go ahead and actually do it. So that's the first issue I see a lot. And then the second one, which is pretty predominant on chains like ADA or Solana, is when these chains have like multi transactions for the purchase and the sale, right? Like generally you'll see the asset go into a contract or like a NFT marketplace. So unlike Ethereum and OpenSea, where it's all in one transaction, you'll see the outflow of say Solana and then an NFT come in at a later time. If you're not keeping records for which links, compiling that and figuring out after the fact is a pretty lengthy process. So simply by just keeping records of this NFT or these two transactions, you will save yourself or your tax preparer a ton of time.
Nice. Yeah, we actually just added automatic support for multi NFT transactions on CTC, which has saved my butt. So yeah, like I was previously doing a lot of manual record keeping for those transactions. So yeah, that's a pretty neat feature. That's saved Yeah, save my butt in time for the deadline. Sorry. Yeah.
That's
Can
great
I
to
ask
hear.
a record keeping question? When you say
Sure.
record keeping, like what do you mean by record keeping? Can you just write on a can you write on a napkin, hey, Justin, Blaize, and Pat have all gone thirds in this NFT? Like, is that good enough? Do you have to be keeping it in a certain software, in a certain format? Justin, like, what are the IRS rules around record keeping? Can you just write it on a piece of rubbish and stick it on your fridge and hope for the best? Or do you need something more legitimate or time stamped, or how does that all work?
Well, technically, you can write it on a piece of rubbish and keep it on your fridge if you want. That's probably going to be pretty painful to get to your actual lawyers or accountants come tax time, but you could do
Yep.
that. Generally, I recommend if you're doing like DeFi record keeping, just to have like an Excel document. I don't recommend writing transaction hashes by hand, as those are quite lengthy, and capitalization may matter as well. So kind of just a simple Excel document will get the job done. And then as far as like partnerships and joint ventures, it's generally recommended to go and hire an attorney, but that may not be worth doing until after the fact. So if you're going to do it later on, then even if it's just something simple like making a Word document and getting everyone to sign it, that'll go a long way in the future.
Great. So you can technically do it on anything, but
Yep,
Excel document or Word is definitely the easiest way to go.
correct.
Great. Thank you, Justin.
Justin, I just had a quick question as well. So, like, in the past year, I had a situation where a friend was noticing assets leaving his wallet, and it turned out he'd approved a malicious contract while he was doing some DeFi stuff, and he kind of freaked out, and he knew my wallet address, so he sent me all his NFTs and some tokens as well, because he's worried about them getting stolen. Um, Eventually, I returned them when he created a fresh wallet or whatever. And basically, like they kind of showed up in my on CryptoTaxCalculator, and I remember what the transactions were. So I marked them as like kind of ignore in and ignore out, because I eventually sent them back to him. When I just left a note on the transactions, is something like that acceptable, or like how should that situation sort of be handled?
Yeah, so this is again pretty fact dependent. If you receive something, let's call it 1x, and you gave it, you returned 1x back to your friend, whether that's in the form of NFTs or Ethereum or Bitcoin, then doing ignore in and ignore out is fine. It's not the most accurate way of doing it, but it does achieve the intended result. Um, as far as like the most accurate way, it would kind of be like a borrow in and a non-taxable outflow, such as like gift in, gift out would work. The keyword for the software doesn't matter too much as long as the result is accurate, which you have achieved. So that's fantastic. And alternatively, if you are going to do the non-taxable keywords that actually enter the holdings, you're probably going to want to spec ID out those assets. For example, like if you have Ethereum on a wallet and your friend sent you some Ethereum, you might want to rename those to something different so it doesn't take Ethereum from your holdings and remove it. So that's another factor to keep in mind as well.
So just like name it like token A, token B sort of thing, just to differentiate it, basically.
Yeah, I generally stick with the main symbol. So like for Ethereum, I would do ETH dash whatever. Could be your friend's name, could be maybe you guys have a title for the situation that occurred. So that you still know it's ETH, but that it isn't like your traditional ETH that you're carrying.
Yeah, okay, that makes sense. That's actually a pretty good idea. I think I'll fix that up tonight. Cool. Thanks for kind of going off on that tangent with me. Is there anything else that you see people sort of regularly run into in terms of issues?
I think one of the greatest ones is not considering taxes when you're trading NFTs, especially some of the bigger NFT traders. What I see quite frequently is, they'll have large capital gains on paper going from NFT one to NFT two, etc. And then they'll leave all of their assets tied up into NFTs. And, unfortunately, those may drop, right? So come end of the year, your portfolio may be worth significantly less than what the story paints from your capital gains. So you might be in a situation where you owe, let's say 100 grand in taxes, but you didn't put any money aside and now your portfolio is only worth 20 grand. Well, then paying those taxes may be impossible. So that's a pretty, unfortunately, common fact pattern. So I definitely recommend, keeping taxes on your mind while trading and putting aside some portion of your gains to cover taxes.
That makes sense for sure. And like from sort of all those different issues that you encounter, is there something that people can do in terms of like, avoiding these altogether? Is there like something that you recommend? Is tax software the right way to go for people, or Excel spreadsheets, or like what sort of, solutions do people have?
Is this in regard to crypto taxes in general?
Just, yeah, like the NFT taxes, like people kind of running into these issues. A lot of them seem to sort of be relating to like kind of not planning or not recording their transactions and that sort of thing. Yeah, do you have any thoughts there on sort of
Yeah,
like how
so definitely keep like an inventory log, and that can be an Excel document, a Word doc, or even written on a napkin of just like, here are your wallets. That's kind of where you start for any crypto tax preparation. And that's kind of where, if you mess that up, you're going to mess everything else up as well, if you're missing a wallet per se. So just keeping a log of like all your Ethereum wallet addresses will go pretty far. And then using a crypto tax software that you find to be pretty accurate. My favorite, CTC. You guys do a really good job of pulling in DeFi data, so props there. My recommendation, regardless of which software you're using, is to just do a quick test on the different categories on a block explorer. So like for Ethereum, that'd be the ERC20 tab, the 1155 tab, and just make sure one of those is being pulled in from the actual data pool as like a quick double check. And then you'll be pretty good to go. Then you just gotta, unfortunately go through the process and fix all the inflows and outflows.
Justin, we've had some questions come in the chat. So this one's from Spaceman 10101. For gas fees, the question is, for gas fees not related to purchasing or selling an NFT or crypto, i.e. failed transactions, transferring NFTs, cryptos between our own wallets, can you use those in any way to reduce tax liability?
Not in a simple sense. Generally, I would mark a transaction fee as a taxable event. But if you're lucky enough and that like the value has gone down, say for most people over 2022, you bought some Ethereum, towards the peak in 2021, and you're using it for transactions now, you'll be incurring capital losses. So that does help. That's kind of the best you can do, besides making sure that anytime it can be added to a transaction, that it is. For example, like if you're buying an NFT or you're selling something, you can use the gas fee there. But if you're just transferring crypto from, say, an exchange to your wallet, the gas fee doesn't do you much, fortunately.
Okay.
This could change in the future, but again, no guidance here currently.
And we have another question from David in the chat as well. A reminder that if you're watching, you have any NFT or crypto tax questions, please pop them in the chat while we can use Justin McCormick, your wonderful brain, to get all the answers that we need. So from David, we have, if I'm trading as a business, trading stock rules, should I be using the NFT collection's floor price as the ending value?
Is this question for, I forget the term for it, where you're doing the capital gains and losses based on your portfolio value? Because generally, like, fair market value doesn't matter for NFT trades, assuming you're getting something else in that isn't an NFT. So you just use the fair market value of the other asset. If you're doing like, forget the term for it, I think it's like mark to mark or mark to market. Then figuring out your fair market value of your holdings is actually very important at the end of the year, and that will be a lengthy project depending on your activity and your holdings.
Great, thanks for clarifying there. Patrick, do you have any other questions to ask Justin today?
This isn't something that I've done personally, but Justin, I'm not sure if maybe you've seen this or not. But like liquidity pooling with NFTs and like another asset. Have you got any thoughts on how that is treated at all, or like depositing NFTs into liquidity pool, or like earning rewards off that at all?
So liquidity pools, regardless of NFTs, have two options. First is that they're non-taxable, and the second is that they are. From my point of view, it kind of just really depends on the actual liquidity pool. Some you can actually like trade the token you receive for entering the position. Some you can't. That's generally how I base taxable versus non-taxable. If you're going to go down the non-taxable route, you're just going to want to record all the different little income events that occur and keep good records as far as the initial inflow and the final exit. That way you can determine like how much more you actually have at the end of it all.
Okay. Yeah, that makes sense. Cool.
Justin, we've had some more questions come in from the chat here. So from Monsoon, I hope I'm pronouncing that correctly. I apologize if I'm not, but thank you for your question. We have, the question is, if we buy an NFT that we hold through the end of the year, is there any calculation of the loss or gain of that NFT if it's not been sold?
You would have to go and find a comparable one on a marketplace, and then if it's past a year, you'd be in long-term gain or losses. So you can use the fair market value determination as the proceeds for like a hypothetical trade. Subtract your cost basis, and then depending on your tax bracket, long-term is going to be either 0, 15, or 20%. For most people, it's 15. So I would just multiply that final result by 0.15 to determine your gain or loss, or your taxable gain or loss.
Great. And the follow-up question from Monsoon, sorry, is if most NFTs have lost their value, do they count as losses if they haven't sold? Is it the same answer as your reply
Yeah,
before?
unfortunately, unless you actually sell it, you can't claim the loss. A recent
Yeah.
memo has been released by the IRS, I think in January, where they double down on that position. So unless you actually sell it, the loss is just hypothetical.
I mean, that would be the dream, wouldn't it? To claim your losses, but still have the asset in your wallet, hoping that one day maybe it will become profitable for you. Unfortunately, that would be gaming the system. So great. Do we have any other questions for our viewers watching online? You've got access to a very knowledgeable CPA, Justin. What about Justin yourself? Are there any if you could give like one piece of advice to someone that is starting out doing their crypto tax for the first time, or perhaps about to approach it again this year before the final cutoff for submission, is there anything that you can do to make your life easier throughout the year while you are buying, selling, whatever you're doing, to make tax less of a headache?
Absolutely. You're going to want to develop your own tax strategy, and this is very unique on an individual level. For like miners and stakers, generally this is something along the lines of selling 30 or 40% of each income event to cover taxes at the end of the year. Same kind of principle would apply to NFT traders. Essentially, if you're making money, put some aside come taxes. That way, you're never in a terrible situation. And then two, make record keeping a part of your tax strategy, whether that's just keeping an inventory document or keeping a log of your more complex activity. CTC can handle the vast majority of NFT trades, but there are still some novel platforms and dexes out there that like to just make new ways for life to be difficult. So record keeping will prevent a lot of time having to be spent there.
Mm. Well, Justin, that is not the answer that I wanted, which was like a magic wand or solution. Unfortunately, it is putting cash aside and doing your record keeping. So, I could have probably guessed that, but I was hoping you would have a really easy solution. But thank you. We do have another question in the chat from Johnny Luna. Reminder that if you have questions, please pop them in. The question is, how do you gift an NFT and record it?
So gifting an NFT depends on who you're gifting it to. If you're giving it to like a family member or a friend, I would just document the gift and provide them a gift receipt, have them sign it if you could. Alternatively, just any form of substantiation, whether it's like a text or a chat message, to kind of help prove to the IRS that this was indeed a gift, will go a long way. And then two, if the gift is to like a charity, there are a bunch of nitty-gritty rules that you'll need to follow, such as if it's over a certain dollar amount, you're going to want to unfortunately get the thing appraised. You're also going to want to get the form that the charity gives you for the actual tax write-off. And so that's kind of the core of gifting NFTs right there.
Wow. So quite simple with when you're transferring or gifting to a friend, but can be more complicated if you're being philanthropic and generous to a charity.
Correct.
We have a question from Bill Brock. Love your name, Bill. Great. The question is, on NFTs created via gaming, client purchases NFT tokens earned via gaming, which is a taxable event, then upgrades the NFT using further gaming tokens. Where's the question there? Sort of like putting mag wheels on a car. I don't understand that reference. I'm not a car person, so I apologize to anyone watching there. But if one NFT can have several upgrades, how do you tell clients to manage that in an app like CryptoTaxCalculator?
You're going to want to keep good records of like the actual upgrade events, because then those will be taxable, but you can wrap the transaction value into the cost basis of your original NFT. So if there's a gain, right, you're going to want to have a strategy in place for paying that. But then at least on the receiving side, your original NFT's cost basis will continue to increase. So you're not just losing your NFT that you're using for the upgrades.
So would each upgrade be a taxable event in itself?
Correct. And then that transaction value is going to get added to the original NFT's cost basis. And this is only going to be doable if you keep good records and you can provide some form of substantiation. That can be a forum post on the game talking about the upgrades. So you're going to want like just a little something to prove your point.
Yeah, great. Alrighty. Well, I think that's all we have time for today. Justin, unless Patrick, do you have anything else that you'd like to? This is your last opportunity to pick Justin's brain. Oh, and we've had one more question come in. So do you have anything, Patrick?
I'm good. I think all my questions have been answered.
All right, we'll move to Miles. Just a reminder, keep popping your questions in. From Miles, we have, are you taxed on the gain of value in ETH when you purchase an NFT? For example, if I bought ETH at $100, that would be nice. If I bought ETH at $100, then bought an NFT with that ETH when the ETH was worth $1,000, will I be taxed on that as a capital gain?
Yes, you will.
All right, nice and simple.
Yep.
Great.
Fortunate, but correct.
Well, Justin, I would like to extend a massive thank you from myself and Patrick and the entire team of CryptoTaxCalculator, and I'm sure everyone watching. It's been really fantastic to get into the nitty-gritty of NFT taxes and to have our questions answered. Really appreciate it. Where can our viewers learn more about you and the good work you're doing at FoundersCPA?
You can find us via our website, which is FoundersCPA.com. Additionally, we do have a contact form you can fill out if you are going through your own crypto taxes and are really struggling. Feel free to reach out and set up a consultation.
Awesome. Thank you so much, Justin. And a reminder for everyone watching, if you are looking for a crypto tax solution, CryptoTaxCalculator.io is something that you can use as well. And that's something that you can self-manage and walk through. And we've got a fantastic support team that can help you along the way as well. We are doing another one of these sessions tomorrow, which we're very excited about. We'll be taking a deep dive, bit of a plunge into DeFi taxes with Noah and Wesley from the network firm. Same time, same place. And yeah, we'll be live at 8 p.m. tomorrow night. If you've got any questions for DeFi taxes, please tune in. Otherwise, I hope everyone has a lovely evening. Thank you again, Justin. And have a fabulous night.
Thank you. Thanks for having me and have a good night yourself.
See you later.
Thanks.